In this video, I want to consider the power of Treasury bills. It is a safe investment that guarantees returns. In other words, I want to consider the advantages of investing in Treasury bills. Number one is safety. There's that safety and security because it is issued by the government, a stable government, a strong government, making them virtually risk-free and ideal for conservative investors who don't want to stomach risk, who want a secure kind of investment. They are risk averse. Number two is liquidity. Treasury bills are highly liquid, meaning that you can very easily buy them or sell them in the open markets, in the secondary market, providing investors with a quick access to their money whenever they need to liquidate their investment. You must not hold until maturity. So in case you want to sell to meet one or two obligations, financial obligations, you can very easily dispose of your bonds and then your treasury bills, and then you get your money back. Number three is short-term investments. It's not the duration period, the maturity period is not as long as a typical government bond. It ranges between a few days or a few weeks to a year. So it's a flexible short-term investment. Actually, it's good for those who are seeking kind of a temporary short-term investment to park their cash instead of keeping it in the bank that may not really yield something tangible. At least the interest rate on a typical treasury bill offering is more than what could be obtainable in a regular savings accounts. Number four is low or rather low minimum investments. It's a low minimum investments. In other words, the initial capital outlay is quite small, because you can, with as little as $100, you can invest in treasury bills. You don't need to be a high net worth individual or an institutional investor. No, with as little as $100, you can invest in treasury bills. And so number five is there's no states or local taxes. So when your return comes in, the state government will not tax it. The local government will not tax your return. Only the federal government has the right, possesses the right to tax your yield. So at least you are exempted from other government strata. Number six is predictable returns. The return on treasury bill is known at the time of purchase. You know your return already. Let's say the treasury bill has a face value of 1,000 naira or $1,000, the case may be, or your country's currency, and you're buying at, let's say, 800 naira or dollar or your country's currency. Right from the inception, you know that yes, you have a pre-tax yield returns of $200 or naira, as the case may be. So the return is predetermined, So it provides that certainty when it comes to the payout. Number seven is diversification. So including treasury bills can help to diversify risk, especially in an uncertain economic environment, because they are not correlated with stocks. In other words, when stocks is going this way, treasury bill yield, is going the other way. They don't really go in unison. They don't go in the same direction. They tend to go in opposite direction. They are not really correlated when it comes to their movements and returns. Please invest, or rather, sorry, like this video and give me a thumbs up. All right, and as well as subscribe to this channel. I'm used to investing. Sorry for that. Please motivate me to keep on bringing these contents, because you are my life wire when it comes to content creation. When you watch and you you subscribe, that's where the motivation, the catalyst, and the joy comes in producing contents of this nature. And when you apply the contents of this channel, I'm telling you, you get to be financially free in the future. Number 8 is there's no interest risk for short-term maturities. Treasury bills carry minimal interest rate risk compared to longer-term bonds, as the principal is returned very quickly to you because the time period is very, very short. So there's no interest rate risk. That fluctuation in interest rate doesn't really affect treasury bill much because of the lower maturity periods. Number 9 is suitable for cash management. Treasury bills are often used by businesses, institutions, and individuals who want to like apply cash management, providing a safe and liquid vehicle for them to stash their money, to keep their money, instead of parking their funds in a regular bank account that doesn't really yield that much. You have excessive cash you wouldn't want to send to the bank, and you may not need, for some time, maybe less than a year. You can very easily put it in treasury bills, so you get your interest back, and which of course is always it's most of the times more than what is obtainable from a typical savings account in the bank. Number 10 is easy to purchase. Treasury bills can be bought directly from the US Treasury or the Nigerian government treasury or your country's treasury, making them easy to purchase for individual investors. It's not a difficult thing to purchase. There's no kind of barrier to entry. Anybody that has the money and the interest can come in and invest in these instruments. These advantages makes treasury bills an attractive option for conservative investors looking for safe, liquid, stable, short-term duration investments with low risk. So if these are your criteria for investing, you want safety, you want predictable return, you cannot stomach fluctuation in the markets, and you want to invest for the short term, not for the long run, I will advise you invest in treasury bills.